This is one that we know it's a love or hate stock. I mean, I don't know any other way to say it.
That's exactly what I was going to say, Alex. This is one of my personal favorites to search for on social media because, I mean, you cannot find a more clear divide of the Bears versus the Bulls. And despite the fact that, they posted obviously a strong second quarter last week, they saw a surprise profit. They announced they're going to be ramping up cash. The Bears still do exist in this name because, you can make a bearish and bullish case for any stock. But, to go through some of these interesting numbers on their valuation, this stock is up 250% year to date, over 35% month to date, and over 3% this week. Now, they were actually up 5% this week, but they've fallen about 1% or 0.5% now today. So, now they're worth more than Volkswagen, Toyota, and Honda combined. But we always say on this show that they don't really trade like an auto company anymore. They trade like a tech company. But I also thought it was kind of interesting. They're actually now also worth more than American Express and Bank of America, which are two, huge staples in the financial space. So if you've been betting against the stock in the last few months, you're not a happy camper right now. But there was some news on them this week that wasn't super positive. Bernstein downgraded Tesla earlier this week from underperform to market perform with a $900 price target, and basically said the stock will tank 42% from its mind-boggling valuation. So that's exactly the bearish case right now, is that this stock has run up too much too fast. But to touch on something you mentioned, Alex, now their eligibility to be in the S&P 500 is super newsworthy and noteworthy on social media this morning because, it seems like there's this debate if they should belong in the S&P 500, if, what happens if they drop, what happens if they do what Bernstein says and they drop 42%, then do they still belong? I mean, to go through some of the eligibility of the S&P 500, you have to be U.S.-based, you have to have been listed on the NYSE, NASDAQ, and CBOE, and you have to have a market cap of over $8.2 billion and 4 quarters of profitability. So that's what it takes to be in the S&P 500. But to go into our first tweet, he says, kind of a good point by someone on Reddit. Tesla doesn't need S&P 500. S&P 500 needs Tesla. Now, I don't necessarily know if that's true because the S&P 500 is up over almost 5% this month without Tesla, but I just thought that was an interesting point, kind of touches on this whole debate. But our next tweet kind of goes into this hype, this hype buying we've seen in Tesla, which says every analyst now and then tells people to sell Tesla now because of the overvalued price. Do not listen to them because when you sell it, price drops and those experts will buy those shares. To be successful in the stock market is to do the opposite of the majority. Now, I would say the majority right now, it seems like, is pretty positive on Tesla. With these numbers, it's hard to argue with. But Kevin, obviously we can't give our advice here, but I don't know how I feel about this statement. You have to do the opposite of the majority, especially when trading Tesla right now.
Let me make a blanket statement about my trading career, Jenny Horn. I have stood in a trading pit and looked up at the screens and said, in another life, I must have been a salmon. Because I spend most of my career going against the majority in the world. So I understand what this guy is saying in terms of who you listen to and the whole crowd and how you should go against them. I feel like I've been doing that much of my career. So I understand what they're saying. And your first tweet is also interesting because the biggest cheer when Tesla put out their earnings, which gave them 4 consecutive quarters of positive earnings and eligibility for the S&P 500 might be Standard & Poor's, because getting this stock in their benchmark of stocks is going to be enormously popular for that benchmark because of the polarizing nature of Tesla stock, guys.
And simply, Kevin, just off its market cap. I mean, you're talking about one of the world's biggest companies. Based off of what Jenny said, I believe it's the world's biggest automaker now. It should be represented in what's supposed to be the greatest measure of broad-based performance of the U.S. stock market. So to me, it does deserve a place in there for more reasons just than it was able to string together some profits. But Jenny, great stuff as always. We appreciate you taking the time on this Friday morning. As we say goodbye to Jenny, we want to welcome in Andy Swan, the co-founder of LikeFolio.com, to the show. Good morning to you, Andy. Continue the conversation here around Tesla, which is one that we love to have with you guys because to all of Jenny's points, this is one that's that's popular on social media, but are they talking about buying Teslas? That's the question.
They are, and they have been, and that's why we've been, big proponents of this company for a couple of years on this show. If you look at LikeFolio purchase intent mentions of Tesla, so this is people talking about taking out a lease, buying the cars, any of the brands that they make. What the chart right now is the Model Y, which is just coming out, I think, is a total sleeper. Everybody likes to talk about the Model 3. The Model Y, it's small sample size because they just started production, but this is people talking about wanting to buy or buying the Model Y. You can see that acceleration lately as the cars start to hit the road, as they start to hit these, showrooms. Really nice car. People love it. And it's just in line with what Tesla has done consistently. And that is continue to put out very innovative, groundbreaking product that people love. If we look at LikeFolio purchase intent mentions over the history of Tesla, you will see that there was an enormous surge over the last 18 months, 24 months in people's interest in buying these cars and consumer demand for these cars. And that really preceded the massive jump in the stock price. And I think, for Tesla, for us, this is it's one of those companies that you're kind of crazy to bet against. You're just really stubborn on valuation. There's so many companies that make products that people don't care about that you could be bearish on. Why be bearish on a company that literally everybody that owns one loves it, and that the consumer demand is just popping like this? It's just, in my opinion, one of the best companies in the world, and it's fun to watch Wall Street kind of wake up to this idea that Tesla's not necessarily an auto manufacturer. This is a tech company, and they're thinking of things as a winner-take-all perspective, not a market share perspective, that they're a winner-take-all type of company in energy technology, and the car is a platform to get there. And I think Wall Street's starting to wake up to that and seeing what that could mean 10 years down the road.
Andy, this is such an incredible discussion to have about Tesla because of everything that they have going on and everything that, it seems to me in my world, Tesla's, the autos is just one part of what this guy has. And when you're buying stock in Tesla, or in the opposite case, shorting Tesla stock, you're shorting Thomas Edison, right? I mean, yeah. You're basically shorting the greatest inventor in my lifetime. And the car, this Tesla car, could just be the beginning, just be the peak of what he's going to bring to the table, because it appears like this guy sees a problem and he fixes it. I mean, in every single aspect of his life. It's hard for me. I look at this guy maybe differently than other people do. But I'm leading to some type of question. When you guys read tweets and go over tweets and analyze tweets on Tesla, is it all about cars, or is it about home batteries? Is it about spaceships? Is it about all the other things that he does with his, when you're buying Tesla stock, aren't you just buying Elon Musk? You're investing in him basically, aren't you?
Yeah, pretty much. I mean, what people talk about is the car that they just bought. So, 4 or 5 years ago, that's all that it was, you got you bought the car, you bought the Roadster, the Model S. Now there's multiple models. People like them quite a bit. The price point has come down so that normal people, everyday people, can afford to lease or purchase a Model 3, even a Model Y. And they're talking about trucks, they're talking about semis, they're talking about solar panels on their house, they're talking about power walls storing energy for their home. This company is very different than other companies, and I think purely focusing on it from a auto manufacturer market share perspective is exactly why people are getting burned betting against this stock. I can't sit here and tell you the stock should be worth 1,500. I can't tell you if it should be worth 200. I can't tell you if it should be worth 5,000. But what I can tell you is that this company is building phenomenal technology and has a long-term vision to truly change the world in a winner-take-all mindset. And that's tough to bet against, especially like Kevin, you said. I mean, you're betting against essentially a rocket scientist that wakes up every morning thinking about how he can crush short sellers. Like, that is not the guy that I want to go against right now. There's plenty of companies out there that are truly terrible that you can bet against. Why pick this one? That's my big point of the day. You know, just let's calm down a little bit. I don't know if it's worth 1,500, but you know, it's a silly one to bet against.
Right.
No, and I think you make some excellent points there, Andy. And there's a lot to break down here. First off, the data that you're giving us actually is people buying the car. And so to see that growth at that rate, I mean, that's all the proof that I think you need to show that they're executing on what they're doing right now. Who's to say that they're not going to be able to continue to develop this, scale it out, and execute in other ways? But the message that I think is most important of what you've said, Andy, and please correct me at any point if I'm saying this wrong, is why is this the best opportunity to bet against? If you don't want to be involved in Tesla, sure, we don't necessarily know where it's valued, but why do you need to be short it? Just don't invest in it. Just don't trade it. Find something else with less risk. Get short something that your trends or other things are saying is working against them. This isn't necessarily the greatest opportunity to bet against, even if it does go to 200.
Right. No, that's exactly right. I mean, yes, it could go to 200, it could go to 100, it could go to 0. I understand all of those points. It's a high risk, very high beta stock that is heavily shorted, and that creates these short squeezes. Like it just plateaus, and then something new comes out, and more people figure out what this company's trying to do, and it's a short squeeze. It forces buyers into the market. It forces the stock higher. Just happens over and over, and you just wonder how long people can continue to run that money-losing playbook. I will say that the other thing that makes me really interested in Tesla, as we look through these tweets, so we get this stuff algorithmically. We're figuring out all the time how many people are talking about buying these products. It's a pretty algorithmic process, but we do have qualitative review that we do of this company. And one of the things that we're starting to see is this real notion of repeat buyers of Tesla products, the second car in the garage, trading in their old Model S and getting a Model 3 or Model Y. Phrases like "I'll never own another car brand again" are popping up more and more, and that is a testament. They do have some serious customer service problems, but in general, once people own and drive one of these cars, they're pretty much hooked. And I think that combined with the demand growth that we see is just pretty clear why this stock has gone $250 to $1,500 over the course of the last year. Very interesting, very fun to watch. It's one I love to have on my watch list and scan Twitter on, because you get so many just really, really hot takes on this stock.